All right, let's jump right in. Today we're going to take a deep dive into ICICI Prudential Life Insurance's Q3 FY 2025 results. We've got a lot to unpack here. We've got the audited financials, we've got the management commentary, and we've even got their investor presentation. So it's really like a backstage pass to how one of India's biggest insurers is, strategizing and performing.
Yeah, it's exciting stuff, and the first thing that really strikes me is the context here. India's life insurance market is just ripe with opportunity, especially when we look at areas like protection and retirement. We're talking a massive protection gap of something like $16.5 trillion, and we see really low pension asset penetration compared to a lot of other countries.
Okay, so there's a huge need there. But how is ICICI Prudential positioned to actually capitalize on this opportunity?
Well, let's start by taking a look at their performance this quarter. They're reporting an 18.3% year-on-year jump in profit after tax, which is impressive on its own, but it's even more noteworthy when you consider that they've been outperforming the whole industry in premium growth for 5 quarters straight. This suggests that they're not just riding some kind of wave; they're actually
I'm torn.
implementing effective strategies.
So they're on a roll, but it's not all about, grabbing market share. Are they doing things the right way? What about customer satisfaction? What about loyalty?
Well, that's where their 13th month persistency ratio comes in. It's almost 90%, which basically means that people are sticking with their policies. And that's a great indication of, trust in the brand, the perceived value of their products. And really it's a key indicator of sustainable success, I would say.
Yeah, absolutely. Impressive percentages are one thing, but what about the hard numbers? Their value of new business, the VNB, grew by 8.5% to 1,575 crore. Now, I know VNB is a big deal in insurance, but for a listener who might not be knee-deep in financials every day, what's the significance here?
Sure. So VNB is essentially forecasting the profitability of new policies sold. So this growth is telling us that their new business is not just, expanding, but it's becoming even more profitable. It's not just about selling more, it's about selling the right products to the right customers.
Smart, and their total premium also jumped up by 14.4%, another clear indicator of growth. But growth without stability can be risky. So what about their financial foundation?
Oh, it looks rock solid from what I see here. Their assets under management, the AUM stands at a hefty euro 3,104.14 billion, and their solvency ratio, which basically measures their ability to, meet long-term obligations and pay out claims, is a whopping 211.8%. That's way above the regulatory requirement of 150%, signaling that they can really weather any storm.
Okay, so big picture, we're seeing that they're financially sound and they're growing rapidly. But let's get into some specifics here. What kind of product trends are fueling this success?
2 words: annuities and protection. Their annuity APE, annualized premium equivalent, has just skyrocketed 81.7% year on year, and retail protection wasn't far behind at 24.2%.
Wow, those are huge jumps.
Yeah.
Are these just industry trends, or is ICICI Prudential doing something unique here?
It's a combination. There's definitely a growing awareness, I think, among Indian consumers about, the need for retirement planning and for protection. But ICICI Prudential is capitalizing on this by innovating. They recently launched ICICI Prawish, which is a health insurance plan specifically tailored for women, recognizing the unique healthcare needs of that segment.
That's a savvy move, tapping into an often overlooked market. What about on the retirement front?
Well, they've introduced the ICICI Pru Guaranteed Pension Plan Flexi with an increasing income feature. And it's designed to combat inflation, as life expectancy increases. Making sure that your income keeps pace with rising costs becomes so crucial.
It seems like they're really tuned in to the anxieties of their target audience. It's like they're not just selling policies, they're actually addressing real-life financial concerns. But beyond products, how are they leveraging technology and how are they integrating ESG principles?
Those are key elements of their strategy. On the technology front, they're really, making things easier for customers. They've got digital payouts, 24/7 chatbot support, and a really user-friendly mobile app. And their ESG commitment is clear. You can see it reflected in their solid MSCI ESG rating, their focus on responsible investing and dedication to human capital development. In fact, they boast the highest percentage of women among Indian insurers at 29%. Which is a significant achievement in a traditionally male-dominated field.
So they're ticking all the boxes. Strong financials, smart products, tech-savvy approach, and an ESG focus. But I'm curious, is there more to this story?
Oh, there's always more to uncover. Let's delve a little deeper into their audited financials and see what other insights we can glean about their operational efficiency, their investment strategies, and their risk management practices.
Sounds good to me. Let's take a quick pause and then we'll come back and get our hands dirty with the nitty-gritty of their financial performance. Okay, we are back and ready to really dig into the details of ICICI Prudential's Q3 performance. We've established that they're, growing rapidly and strategically, but the audited financials, I think, will really give us a clear picture of how they're managing the engine under the hood, so to speak.
Absolutely. And one of the first things that jumps out to me is their investment income. They've clearly done a good job of diversifying their portfolio, which helps mitigate risk. While unit-linked income, which is tied to market performance, can be volatile, their other than unit-linked income provides a lot more stability.
Okay, hold on for a second. For our listener who's not a finance whiz, can you break down that other than unit-linked income? What's generating that stability?
Sure. Good point. So this income stream comes from things like fixed income investments and real estate. Think of it as their bedrock, less flashy than market-linked returns, but much more predictable. And what's interesting is that this segment actually increased year on year, which is a positive sign in what could be a pretty turbulent market environment.
So they've got a safety net built in. That's got to be good news for investors and indeed policyholders. Speaking of stability, though, I noticed their operating expenses decreased slightly, even as their business expanded. That can't be easy to pull off.
No, it really speaks to their focus on efficiency. They've managed to keep costs under control while still investing in growth areas. And there's an interesting detail here. They achieved this partly through lower advertising costs.
Huh. Maybe they're finding more targeted and cost-effective ways to reach their audience. Perhaps through digital channels, which would tie back to that tech-focused strategy we talked about. But putting efficiency aside for a minute, what about their core responsibility? Paying out claims. Those increased year on year. Should we be concerned about that?
Not necessarily. The increase was largely due to higher maturity claims in their unit-linked and participating portfolios, as well as some surrenders and withdrawals. This is pretty normal as their business grows and policies mature. It's a sign of a healthy, evolving portfolio, not a cause for alarm.
That makes sense. It's like a well-managed garden. Some plants are ready for harvest, making room for new growth. Their press release did a good job of breaking down their performance by product segment. We've talked about that standout growth in annuities and protection. But are there any other hidden gems in those numbers?
Well, one detail that caught my eye is that even their savings business, excluding annuities, saw a very respectable 28.1% growth in APE. This means that their more traditional products are still holding their own, even as they push into those higher growth areas.
Like they're hitting on all cylinders.
Yeah.
Maintaining strength in their core business while aggressively pursuing new opportunities.
Exactly. And you can see their commitment to meeting diverse needs. In their retail protection business as well, they're seeing strong growth there, which suggests that they are effectively reaching those individual customers and addressing that protection gap that we were talking about.
It all ties back to that huge market potential that they're tapping into. Their focus on innovation, as highlighted by products like ICICI Prudential, and the increasing income annuity feature is resonating. But beyond product innovation, their CEO, Mr. Anup Bakshi, really emphasized their commitment to technology in the press release. How are they walking the talk?
Well, their digital payout system and the use of chatbots for customer support are great examples. These aren't just, gimmicks. These are addressing genuine customer pain points, making the processes faster and more efficient and ultimately more satisfying for the customer.
It's a win-win. Happy customers, A&D streamlined operations. And while the press release touched upon ESG, we know from their dedicated reports that it's really a core part of their business philosophy.
Oh, absolutely. Their high MSCI ESG rating isn't just some badge of honor. It reflects a real commitment to responsible investing, human capital development, and gender diversity.
They're putting their money where their mouth is. Now, one thing that really struck me in the press release was Mr. Bagchi's emphasis on balancing growth and profitability with risk management. They're not just chasing numbers, they're building a sustainable business.
Yeah, that's a crucial point.
Yeah.
Their focus on delivering sustainable VNB growth is a sign of maturity. They're not, taking unnecessary risks just to achieve short-term gains. They're in it for the long haul.
It's about finding that sweet spot between ambition and prudence. Now we've dissected the financials and the press release, but there's one more piece of the puzzle, their investor presentation. I'm really curious to see how they frame their strategy and the opportunities they're chasing for their stakeholders.
Yeah, it's like getting a glimpse into their playbook for the future. Let's dive in and see what they've highlighted as their key focus areas and how they plan to navigate the evolving landscape of the Indian life insurance market.
All right, let's take another quick pause to gather our thoughts, and then we will unpack this investor presentation and see what other gems we can uncover. We've covered a lot of ground already, haven't we? From, strong financial performance to innovative products. It's clear that ICICI Prudential is really making some smart moves.
Yeah, their investor presentation really drives that point home. They outline what they call their 3C framework: competency, customer centricity, and catalyst, which acts as the foundation for their success.
Okay, I'm intrigued. Break down those C's for me. What do they actually mean in practice?
Well, competency refers to their expertise in the insurance business, their ability to develop products that really meet customer needs, to manage risk effectively, and to navigate a pretty complex regulatory landscape. It's about having the know-how to excel.
So it's not just about selling policies, it's about understanding the intricacies of the whole insurance world. What about customer centricity? That seems like a given for any successful business these days.
Yeah, it's more than just good service, though. ICICI Prudential takes it a step further by actually using data and insights to try to anticipate customer needs, to personalize their offerings, and to ensure a seamless experience across all touch points.
So they're not just reacting to what customers are saying, they're proactively shaping the entire experience. And then finally, there's Catalyst. What role does that play in their strategy?
That's where the technology comes in. They're using it as a lever to accelerate growth and enhance efficiency. We're talking AI, machine learning, data analytics. Not just buzzwords, but tools that they're actively implementing to refine their underwriting process, to personalize product recommendations, and even to mitigate fraud.
It's like they're weaving technology into every aspect of their business. And the results seem to speak for themselves. The presentation highlights their consistent outperformance in retail-weighted received premium RWRP growth, which I understand is a key indicator of their ability to attract and retain individual customers.
Yeah, that outperformance is significant because it's been sustained over time. It really demonstrates the effectiveness of their long-term strategy. And when you look at their product-wise growth breakdown, a clear pattern emerges. Savings are steady, but annuities and protection, particularly retail protection, are driving the bulk of that APE growth.
Well, it's a smart move to double down on those high-growth segments. Given that massive protection gap and the rising need for retirement solutions in India, they're not just riding a wave. They're anticipating where the market is headed.
Absolutely. And they're backing it up with some compelling data points. The presentation reminds us that India's protection gap is a staggering $16.5 trillion, with only about 13% of the addressable population actually holding individual protection policies. The potential for growth is just enormous.
And on the retirement front, they highlight the relatively low pension assets in India compared to other countries, signaling a huge unmet need. Their position as a leading provider of annuity products makes them ideally positioned to capitalize on this trend.
But they're not just relying on market growth. They're actively managing costs,
Right.
maintaining a resilient balance sheet, and taking a prudent approach to risk management.
I was really impressed with their discussion of their solvency ratio and their high-quality asset portfolio. They're clearly not sacrificing financial stability for growth.
No, and their focus on customer centricity is also evident throughout the presentation. They showcase how they're leveraging technology to enhance the customer experience at every stage, from a simplified digital onboarding process to seamless digital payouts.
It's about meeting customers where they are making their lives easier and building trust through consistent positive interactions.
And those efforts are paying off. They report high customer satisfaction levels reflected in those impressive persistency ratios and low complaint rates.
Their technology investments aren't just about streamlining internal processes. They're directly translating into a better customer experience.
Exactly. And let's not forget their commitment to ESG. They highlight their strong MSCI ESG rating, their comprehensive reporting practices, and their focus areas: responsible investing, human capital development, and gender diversity.
They're not just checking boxes here. They're weaving ESG principles into the fabric of their business.
Yeah.
And their LEED Platinum certified headquarters building is a very tangible example of that commitment to sustainability.
It's a holistic approach, and their investor presentation does an excellent job of conveying that long-term vision, a vision that goes beyond just financial metrics.
Now, toward the end of the presentation, they delve into their embedded value, EV, which is a key metric for valuing life insurance companies. They've seen steady growth in their EV, which indicates that they're creating long-term value for their shareholders.
Right, and they go a step further by providing a pretty detailed analysis of the factors driving that growth. And they even conduct a sensitivity analysis to show how their EV might be affected by various economic scenarios. This level of transparency is really reassuring for investors.
It shows that they're not shying away from potential risks,
Mhm.
but rather addressing them head on and providing a very clear picture of their overall financial health.
Yeah, overall, their investor presentation paints a picture of a company that's not only performing well, but operating with a clear sense of purpose and a long-term vision.
So as we wrap up this deep dive into ICICI Prudential,
Yeah.
what are the key takeaways here for our listeners?
Well, I think the biggest takeaway is that success in today's business environment really requires a multifaceted approach. ICICI Prudential demonstrates that by balancing financial strength with customer centricity, embracing innovation and integrating those ESG principles into their core strategy.
They're not just reacting to market trends, they're shaping the future of the whole industry. And for our listener, whether you're an investor or a business leader or simply someone interested in understanding how companies are adapting to a rapidly changing world, there's a lot to learn from ICICI Prudential's journey.
Yeah, their story really underscores the importance of balancing ambition with prudence, embracing technology as an enabler, and never losing sight of the human element, the needs and aspirations of their customers.
Excellent points. Well, as we conclude this deep dive, I'm left with one final thought. ICICI Prudential's success is a testament to the power of long-term thinking, strategic execution, and a commitment to creating value for all stakeholders. It's a reminder that in a world that's so obsessed with short-term gains, sometimes the most sustainable path to success is the one paved with a focus on the long game.
Well said. Thanks for joining us on this deep dive.